Morning, Steve here in Chicago with the morning grain comments. Well, this is one of those rare mornings where we don't really have a lot of overnight trade give us direction on the opening calls. If each commodity in the grains was in a different room, they might trade all different this morning. The corn market could be up because the next 2 weeks forecast for the Midwest is normal to below rainfall and normal to above temps. I think crop conditions are very favorable across the heart of the Midwest, but we'll see if this type of weather begins to bring the edge off the top of the crop estimate. In wheat, we continue to hear about lower estimates of the European and the Russian wheat crop numbers, and the euro trade yesterday was sharply higher in 3-week highs. So wheat market actually might open up better. But the problem is the soybean market. Tomorrow is the deadline for the tariffs that the U.S. will impose on China's imported goods. Overnight, the Chinese said two important things, I think, to the market. Number one, they will not be the first one to initiate tariffs, but they will retaliate. Number two is any open orders that they have with the U.S., they will cancel those orders as soon as the tariffs are imposed. And even though we're at $8.50 beans, which is probably below value, considering record world global demand for beans and meal, that would hurt the bean market. So again, we're trying to decide of the slide from 1060 beans to 850, from 420 corn to 360. How much of that is weather and how much of that is trade issue? I'd bet right now as much as 80% of the move down has been due to this uncertainty of the tariffs and the trade issues. Other than that, there was a pretty extensive article out about China, and they had in September of last year suggested a policy of using ethanol blend in their gas mixture, but that has been delayed, partly because of cost of this whole program, but probably more importantly with these tariff issues, they will not be able to import U.S. corn or U.S. ethanol to kind of make for these goals. So that could also be up in the air. So we've got declining world corn and wheat supplies in 2018 and 19. We've got plenty of beans, and we have a concern about demand. So all those things will kind of filter in and probably keep the volume of the trade down. I don't think anybody wants to buy anything unless they know the trades are off the table. And then again, it's hard to really sell things at these levels. Goldman Sachs came out and said that they maintain an overweight commodity position with a 12-month expected return of 10% on commodity prices, and view the current weakness for commodities as a buying opportunity. Dollars lower, crude's higher, and the U.S. stock market should open up sharply higher. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.